Everyone, it's Mrs. De La Rosa. I wanted to take a moment to go over some of the homework problems from Chapter 2. We won't cover all of them, but I'd like to get you guys started. So looking at number 1, we are going to use the accounting equation to compute the missing elements. So the book tells us that assets equals liabilities plus owner's equity. So if I have liabilities and owner's equity, when I add them up, I get my number for assets. So in this case, it's $48,000 worth of assets. So as long as I know two of these elements in the equation, I can always compute the other missing element. In the next one, I have liabilities and I have assets. Now, they're on opposite sides of the equation. So what I'm going to do is I'm going to subtract 32,000 minus 19,000, and that gives me my owner's equity of 13,000. The same thing for line number 3. I know assets and I know owner's equity, so all I have to do is subtract the two and I get my liabilities of $9,000. All right, let's take a look at number 2. This one's a little bit longer, but it's the same concept. So here we are given a transaction. I see this person invested cash in the business in the amount of $30,000. So I know that my asset of cash increases by $30,000. And I know that the other account that is affected is my owner's equity. So two accounts will always be affected, sometimes three, and we'll get into that in a minute. But here I have 30,000 in assets, 30,000 in owner's equity. Nothing else happens in this problem, so I just bring the balance down. You see how it says balance right here? I just bring them down. I don't put anything in liabilities because nothing happened to that account for this transaction. In B, the owner buys office equipment on account for $8,000. So my two accounts that are affected are my asset of office equipment. It increases by $8,000. And my liabilities also increase by $8,000. The words on account tell us that the owner is liable for the $8,000 in the future. He did not pay cash. If he had paid cash, we'd be subtracting $8,000. But here we're increasing liabilities by $8,000. So I take my balance from A of $30,000. I add $8,000, and now my new balance is $38,000. I bring down my liabilities balance, and I bring down my owner's equity balance to the balance line. In C, the owner buys office equipment for cash in the amount of $1,600. So we enter the change in cash on the first line and the change in equipment on the second line. So my cash decreases by $1,600 because he paid cash, but my asset of office equipment increases by $1,600. Nothing happens to my liabilities, so I leave that blank, and nothing happened to my owner's equity, so I'll leave those two boxes blank as well. So now I bring down my balances. Again, I have to go back up to B. $38,000 minus $1,600 plus $1,600 gives me $38,000 for the balance on C. Nothing happened to liabilities, so I'm just going to bring that balance down of $8,000. And nothing happened to owner's equity, so I'm also going to bring that down in the amount of $30,000 on my balance. Now looking at D, the owner paid cash on account to supplier in transaction B. So the two accounts that are affected here are cash and liabilities. So my cash decreases because I paid a bill. So my cash decreases by $2,000. And my liabilities also decrease by $2,000. So I've made a payment on what I owe. So I don't owe that company $8,000 anymore. I'm bringing that down by $2,000. And nothing happens to owner's equity, so we'll leave that one blank. And now we calculate the new balances. So $38,000 from C, the balance in C, minus $2,000 gives me $36,000. The balance in B is $8,000 for liabilities minus the $2,000 payment I made gives me a balance of $6,000. And nothing happened to owner's equity, so I just bring that $30,000 balance down. All right, let's take a look at number 3. We are given a series of transactions. We see E, F, G, H, I, J, and K. So take it one by one, take it line by line. So we are going to enter these transactions into our chart one by one, okay? So in E, he received cash from a client for professional services in the amount of $17.80, okay? So when I'm thinking about what two accounts were affected, my cash is going to increase by $17.80, and we see that on the first line. And the other account that's affected is my revenue. So his professional services, he provided a service to a client, and that's his revenue. That's money that he's earned. So that's where we put that. And then don't forget your description. You've got to put service fees in there. In F, he pays office rent for February in the amount of $600. So I know that my cash is the first account that's affected. My cash is going to decrease by $600, and my expense account is going to increase by $600. In G, he pays his February phone bill in the amount of $72. So I know that my cash is going to decrease by $72 and my expense increases by $72. And then we have that phone expense description there. In H, he withdrew cash for personal use in the amount of $1,100. So capital is what I put into the business. Drawing is what I take out of the business for personal use. Okay. So when I withdraw cash for personal use, my cash decreases by $1,100. We see that here in H. And the other account that's affected is my drawing because he took it for personal use. So that drawing account increases by $1,100. In I, he performed services for clients on account for $800. Okay, so he didn't receive cash, but we do put this amount in accounts receivable. And accounts receivable is money that's going to be paid to us in the future. So my asset account of accounts receivable increases by $800 right here. And then I recognize the revenue of $800. Even if they haven't paid me, I recognize revenue when it is earned. In J, he paid wages to his part-time employees in the amount of $1,100. So my cash is going to decrease by $1,100. And my expense of wage expense right here is going to increase by $1,100. In K, he received cash for services performed on account in transaction I in the amount of $550. Okay, we enter the change in cash on the first line and the change in the other account on the second line. So we've already recognized this amount in a previous transaction, and it tells us in I. So we're not going to touch revenue here, but they owed us money and they made a payment to us. So we're going to increase our cash on the first line by $550, and we're going to decrease our accounts receivable account by $550. So the second line has to be minus $550 here. Okay. And no other account was affected on the other side. So as you fill this in, please use check my work just to make sure that you've put the right amounts in, okay? What you'll do after you've gone all the way across for every single one of them, then you'll come down and do the balances. Now, don't forget this beginning balance up here. It's kind of hard to see because it's in the blue, but mine says $33,000. So then what I'm going to do is I'm going to take 33,000 plus 1780 minus 600 minus 72 minus 1,100 plus 800 minus 1,100 plus 550 minus 550, and I'm going to enter that amount. Okay, and then I'm going to hit check my work just to make sure I'm correct and make sure I got all my green check marks. and then you move on. Okay, so you just go line by line. Here, nothing happened to liabilities. So we're going to bring down that 6,000 balance. My capital stayed the same. My drawing, I bring it down. My revenues, I will have to add these two up to get my total revenue. And then my expenses, I add them up and bring them down. Okay. For the bottom part down here, all you're going to do is bring these balances down that we put up here. So hit check my work, make sure you've got green check marks all the way across, and then you just plug them in down here. Now, assets should always equal total liabilities and owner's equity. All right, let's take a look at number 4. We are given the asset accounts for a chiropractor's office, and then we are also given the companies that he owes. So right here, these two. So to get started with number 1, we're going across here, we have to add these 4 numbers together. When I add them, that becomes my number for my assets. To get my liabilities, I'm going to add these 2 companies, these numbers right here together, and plug that in liabilities. And if you remember from number 1, if I know 2 parts of the accounting equation, I can always figure out the third. So I would subtract assets minus liabilities. That's going to give me my owner's equity. Okay, so that's how we get started there. The second one tells us during January, the assets increased by 8620 and the liabilities increased by 3470. Okay, so I'm going to take up here from number 1, 26,760 plus 8620 gives me my new asset amount of 35,380. And then I'm going to take 7,850 plus 3,470, and that gives me my new liability amount of 11,320. And now I know 2 pieces of the accounting equation. I can always subtract them and figure out owner's equity. So 35,380 minus 11,320 gives me 24,060. Same thing for number 3. In February, his assets decreased by 3440 and his liabilities increased by 2070. So I'm going to take my assets from number 2, 35,380 minus 3440 gives me my new asset number. I'm going to take liabilities of 11,320 and I'm going to add 2,070, and that gives me my new liabilities number. And again, I know these 2 pieces of the equation, so when I subtract them, I get my owner's equity. Okay, the last one we are going to look at here is number 5. So we're going to just go through this fairly quickly because it's very close to one that we just saw a minute ago. So we are given the transactions up here at the top, A through G. So again, just take it line by line, figure out which 2 accounts were affected. It's always at least 2, and sometimes it's 3. I can already tell that B is going to be 3, so that's very exciting. So the first one, the owner invested cash in the business in the amount of $18,000. So what 2 accounts are affected? My cash account increases by $18,000 and my capital account increases by $18,000. In B, he buys office supplies for $4,400. He puts $1,900 in cash and $2,500 on account. All right, so I see 3 accounts already. So I'm going to recognize the full value of the office supplies for $4,400 in the office supplies account right here for B. And then I know that I paid $1,900 in cash, so I'm going to subtract $1,900 in cash under my cash account. Then I see that he put $2,500 on account. So the owner is liable for that in the future. So my accounts payables increase by $2,500. In transaction C, he pays 1 year insurance premium for $1,000. So that's going to provide him with future benefits. So that is an asset account. So I know that my insurance account is going to increase by $1,000. And the other account that's affected is my cash. My cash decreases by $1,000. In D, he earns revenue totaling $3,400. He gets $1,400 of that in cash, and $2,000 is on account. Ooh, very exciting. We see 3 accounts are affected here, right? So revenues, he earned revenues for $3,400. Okay, so all of that, even if they haven't paid him all of it, we recognize all of revenue when it's earned. So that amount goes down here in my revenue account. It increases by $3,400. My cash account increases by $1,400 because they paid him cash. So I see that right here. And the last account that's affected is my accounts receivable. It increases by $2,000 because they're going to pay him that money in the future. Okay. In E, he pays cash on account to the company that supplied the office supplies in transaction B. Okay. So I know that my cash is going to decrease first by $2,250. And the other account that's affected is my accounts payable. I made a payment to them. So I'm bringing down my balance. So minus $2,250 under my accounts payable because I don't owe them the $2,500 anymore. I made a payment. Okay. We'll get to the balance in a minute. In F, we paid office rent for the month in the amount of $900. So just think about what happens when you pay your rent or your mortgage, right? Your cash decreases. So right here in F, I have a decrease in my cash for $900. The other account that's affected is my expenses. That increases by $900. And then in G, they withdrew cash for personal use in the amount of $100. Okay. So I know that my cash is going to decrease by $100 right here. And the other account that's affected is my drawing. So remember, capital is what they put into the business from their personal account. Drawing is what they take out of their business for personal use. So I'm going to increase that by 100. Okay. So same thing like the last problem we saw, we're going to go down the line now, right? So we've hit check my work. I've got my green check marks. I'm going to start working my way down. Okay. So 18,000 minus 19 minus 1,000 plus 1,400 minus 2,250 minus 900 minus 100. Right here, I get 13,250. Okay. If you go all the way down and your balance just isn't coming out, you might have forgotten an account somewhere. Okay. You might have forgotten to enter a number. Now, check my work is very helpful in telling us if the number's right or wrong, but it won't tell us if we forgot to put a number somewhere. So for example, right here on expenses, if I had forgotten to put that number and I hit check my work, it won't give me an X for a blank space. Okay, so it's a little bit tricky. So we've got to make sure when we're going line by line that we're doing at least 2 entries, maybe 3, right? We saw that 2 times in this problem. So if you go all the way down and it's just not coming out, you might have missed a number somewhere. So go back and check your transactions. But we want to bring down all of our balances, right? And then right here in accounts payable, my new balance was 250. So bring them all down. Make sure you've got all green check marks before you proceed to the next part. Okay, so that's where check my work comes in really handy. And then we're going to scroll down, and on this part, again, we're just going to take each number from this top line right here, and we're just plugging them in. Now, drawing is going to be a negative number because it's money we're taking from the business, and expenses are going to be a negative number. And you can kind of see that right here in the equation. There's my expense, my minus, and my drawing has a minus in front of it too. Okay, because that's money that's coming out of the business as well. So again, total assets should be, it needs to be the same number as my total liabilities and owner's equity. All right, ACC 101 students, I hope that that tutorial was very helpful. Something I did want to mention, the numbers on my screen may be different from the numbers on your screen. So don't worry, it is the same concept though, the same transactions and the same accounts are affected, okay? It's just that the numbers are different. So don't let that throw you off your game. You've got this, but I really hope that this helped a lot. I'm going to try and keep doing these as we go through the mod, try and provide you with mini lectures. I also have tutoring hours available. Please check my course announcements for that information. If you need tutoring outside of my tutoring hours, we do have an amazing team of mentors that are available. You can contact them on Slack. And they have their own Zoom tutoring hours. Depending on what time zone they're in, it's usually 8 to 5. Sometimes I think I've seen one that has tutoring until 6 o'clock. Okay. If you don't know who your mentor is, please let me know so that I can get that information for you and put you two in contact. That way you can jump on a Zoom tutoring with them if I'm unavailable. But I hope this helped. And if you have any questions, please feel free to reach out to me. The best way sometimes to tackle these problems is to take a screenshot and send the picture to me in an email with your question so that I can see what you're seeing. Okay. But I hope this helps, and I hope you guys have a better understanding now. I believe in you. You've got this. Once you get the hang of it, it can be pretty fun. I like teaching this class. It's really exciting for me, and I hope you have as much fun as I am.